Good afternoon, everyone. Today is February 5th. It's about 10 minutes after 12, and we are here with another edition of Chart the Markets, where we talk about technical analysis as it applies to all markets, even the ones that are going crazy, which it looks like is all of them. And I don't know what we're going to talk about today. I don't know where to start because there is so much drama around us that it feels like you're probably in a little bit of a blender, right? There's people telling us that this is going on, that this is happening. It could be this, it's something else, it's making this happen. And ultimately, what do we know? Ultimately, we know one thing. We have one job, and that's to monetize the chart. It is not to get sucked into someone else's tornado. And that tornado is the noise. It's the freight train you get hit by when you get sucked into it. Block out the noise. Don't get sucked into someone else's tornado. And what I'm talking about, quite honestly, just simply is not listening to the chart when the chart is the only thing that you should be listening to. And this is the daily Bitcoin chart, and I'm just showing it with our signals script on it. And this is a trend spider chart. And what have we talked about since up here? Break one level, find the next. Current price looks for past. And that this is a language. Everything we do in technical analysis is based on mathematics. Mathematics is a language. Thus, this is a language unto itself. And it's up to us to learn it, or at least listen to it, and to understand it when it's telling us something. And ultimately, that's what this does. It tries to keep us on the right side of the trade. Some are trades, some are runners. Sometimes it's just chop, and we don't want that. But is it an advantage to have some sort of understanding where price may go? Yeah, I think so. Let's start adding some context to this chart just to kind of review it. There was your high way up here. We got a sell signal at 122.5 on the daily. $67,000 right now. So what do? Do you do what you're told, or do you get sucked into the tornado? There's a whole bunch of talk about what's really going on and who owns Bitcoin and what it's going to be worth one day and all that stuff, but that does absolutely nothing for you in the here and now. Talk about navel gazing and speculation. That's exactly what that is. Follow the chart and do what you're told. And if for a moment you think that price just couldn't possibly go to that ungodly area that you would think that hell would have to freeze over for it to get there, well, guess what? Welcome to the world of markets. And if you don't put structure and rationale and best practices and professionalism and discipline behind you, you're going to get your ass kicked. And I don't care who you are. And that's just, and listen, even the pros have had their ass kicks, right? It's okay. It happens. Just don't let it happen twice. And the purpose of these streams isn't to necessarily help you earn. That's part of it, ultimately. But what's the bigger part of that? Helping you find a way not to get hit by something that most of the market didn't see coming. In a nutshell, that's what we really want to do. Keep you safe so that you're not a victim of all this velocity and drama and group speak. Because it'll make your head hurt and you'll lose your vision. Because you won't be focused on the right things. All I know on this daily chart is that we got a sell signal way up here. It's an all-time high. Everybody knows it. Do you want to take it? Yeah, I'll take it. What's this on the right hand side? Those are just 3 green candles right here in a downtrend. How do we know it's a downtrend? Because our system tells us that. This little move up here, what's this? This is just a retracement and a continuation of a downtrend. 20-day moving average. First level broken. T-line 5 EMA diverged. Not going to hold. First touch rejection. Repeat play. Sideways. Everyone got all excited, right? All excited in here, but we weren't because we knew what was here. We knew that was resistance. We didn't get sucked in. If anything, you were monetizing those rejections. Is this a logical place for a price to fail? Sure. Breakthrough, different. We're having a different conversation, but that's not what happened. And we were warning you time and time and time again, literally for the better part of 8 weeks, as this thing bounced around a level of support, which was the 100-day MA. Telling you, don't get excited, because this divergence was still here, which was telling us, me, you, that the trend was still down and that these were just another example. This is a weekly chart of a little upward momentum, which turns out to be, a positive retracement in a downtrend that continues. And here you are. This is not a game. You're playing with real money. And it doesn't spawn itself like a video game, like when you get your head blown off in Call of Duty. That's not what it's like. You don't just recreate it. So why do stupid stuff? And part of that stupid stuff is not taking the time to teach yourself how to read price on a chart. Just pretend. Oh, and then the market makes a big move and you're like, well, some guy in a black coat and a black hat pulling levers took my money. No, that's not what happened. You took your own money because you didn't do what you should have done. And I don't know how many times we have to tell people to understand that price can go to the places that you don't think it can go. And this is a case in point. Just threw a volume profile on here that's giving us the VWAP, the upper value range, the point of control, the lower value range. Let's take off the 100 and let's take off the 20. Do you remember what we talked about way up here? As we break one level and find the next, and if you don't get support, price will go back to a level or a place that it's been before. And how we talked about the 1000 MA on your daily chart should be a target. Hello, there it is. Did it sound crazy at the time? I guess to some people it did. But let's go back and look at our streams. And we talked about what was going to happen here. If you fail this, you will find the next level. But nobody wanted to listen to it. Yeah. You know what? It's already down in the 70s. It's not going to happen. Well, here you are. Again, it's not a game. Right? This is current price looking for past price in a fractal world. Break one level, find the next. And here you have the weekly chart of Bitcoin. And where have we been saying that current price was going to go ultimately? Right back here. All in here. Why? Because this is the bench of past price that you're looking for, or that it's looking for. There's the 200 MA. How weird is it to go back to the 200 MA on a weekly chart of anything? It's not weird at all. But 80% of the people that trade this thing or own it were in complete and total denial. telling you that they're excited for the pullback as they sweat themselves to death. And this isn't anything about being critical of an asset or the people that trade it. It's being critical of the inability for some inexplicable reason to do what you're friggin' told when the chart tells you to, when the market tells you to. Are you either that delusional, that arrogant, or that ignorant? Which is it? It's time to smarten the hell up. It's not a game. Again, it's not a friggin' game. We come out here to try and keep people safe. Job number one. And hopefully show you how to make some money along the way. But don't be in denial about what price does on the chart. And a lot of the people in this stream that listen to us we go back 5 years, 6 years now. The first time you met me as Bitcoin was climbing to 60 some odd thousand, then I told you, don't get too excited because you're coming back to 30. And I was some guy that didn't know what he was talking about, that didn't know that you couldn't use TA on Bitcoin. Yeah, they said that. And then what happened? A few weeks later, they got their asses served to them, and they were wondering, hey, where's that guy that tried to warn us? Well, here we are 6 years later, and we're still doing it? You kidding me? Come on. This was obvious from the beginning. Break one level, find the next. There's no time for crocodile tears. When you start breaking levels of support, when you're trading above all of them, and you break them time and time and time again, and then you have shorter term averages crossing down through longer term averages, and I don't care which ones they are, but in a move like this, is it not crystal friggin' clear on where price really wanted to go? Yes. This weekly chart never gave you a glimmer of hope that the trend had changed. Even on this mild retracement that never even tested the 20 and 50. There's a message in there. And it's be sure to get out or watch erosion exponentially. Pick one. But if the job is monetizing the chart, watching erosion exponentially shouldn't be an option for you. And I don't know if it's your pride that won't let you sell or what it is. I don't know. The market giveth, the market taketh away, and it will kick you in the teeth and take everything that you have, if you let it. But it's on you. What do these big gaps tell you? They tell you that you're susceptible to momentum moves downward in price if you fall into that gap. We knew this, and we were talking about it the whole time. Not for fun. To try and help people so they don't get kicked in the ass. The information is here. It's all here. Do what you want with it. Ignore it if you want. I don't care. But don't whine about it after the fact, when you continue to lose all your teeth. We know what happens. We knew that if we broke one level, we would find the next. We know when this is diverged and open and down to the right that there's a real good chance you're not going to hold. Here we are, repeating all the same simple shit that we talk about on every time frame because we live in a fractal friggin' world. Why is this gap so dangerous? Because it was created through here. There's nothing here in these parabolic candles to hold price up on the retrace. This is what we talked about. Yeah, sounded like a broken record for 8 weeks, warning you that if you broke down here, which looked likely because this divergence was open and down and to the right, well, you're under a sell signal, that was a higher probability play, and here we are. I don't care how irrational it feels. This is set to visible range, so that's why it's adjusting. This is what it wants. And it always has. And we said this is going to be the range that we fall into, and here we are. And this is a volume shelf, so it's a reasonable place for price to want to sit down, likely looking for this level. Like, we know this stuff. We really do. We knew this the whole time. What else did we know this on? Because, you know, hey, was it just Bitcoin? Because we want to be an equal opportunity critic right now. What about Nvidia? How'd that do? Did it fade? What did it do? Here's the weekly. What's this daily candle tell us? That's the 200 MA daily. Upper value range, lower value range. Looks like the VWAP and the pointing controller sitting on top of one another. Is it reasonable to expect to hope, fingers crossed, to get support from your lower value range with the 200 underneath you? Yeah. But what's this candle not doing? It's not making any effort to try and take the T-line or to try and take that 5 EMA and push. At least not yet. This little doji isn't really overly making me feel very positive. And if you think, oh, that the big impulse and expulsion down is done, no, it's not. I don't care what you're trading. It's not done yet. There's lots more to go. We might get a little positive retracement like we've shown, but then the downtrend will continue. It's not advice. It's just what I believe is going on. There's our weekly chart. You think this gap should be concerning? Absolutely. Now, should you expect one big red candle all the way down to the 200? Of course not. Nothing goes straight up and nothing goes straight down. It's a process. But I think we would be naive to think that this process hasn't kicked off, because it has. When you're at all-time highs on pretty much everything, you know, and every time you blink your eye or turn the page on your calendar, you're making new ones, do you think that's normal? Do you think that's going to continue forever? It's not. The market giveth, the market taketh away. And this is why it's important to take profits. And for some reason, it seems like, you know, at times we have to twist arms in order to do that. I don't know why, but that seems to be the case. Now, if you were trading Nvidia, let's just say you were trading commons, so there's no leverage. What I'm doing is I'm going into our signals indicator on TradingView. We have a choice to use leverage or not. Right now we're just saying we're using spot. Target ROI, we can say, I don't know, 5%. I'm just going to put some numbers in here. That would be take profit 1, because we've added take profits now, okay? So that you have the ability to kind of exit in and exit out. You can put stop losses in and then a trailing stop, all on your chart, right? And that's what it would look like. So what you're looking at here is you see a sell signal. That's your stop. This is take profit level 1. Right? So take profit level 1 would have been hit, and then you would have been stopped out on your trailer. Here you have a move higher. There's your entry. There's take profit number 1. Right? Also got hit, and then you would have been stopped out on your trailer in this case. And this is on the weekly chart. So those are actually reasonable moves. Here's your first sell signal, and when this candle closes, you're going to have, if the signal still holds, a stop loss level to the over here, and then you'll have your 3 different take profit levels. And what happens is you're going to be able to exit your trade without even thinking about it. It's going to be this manages it for you, and it all shows up dynamically on your screen. Your hard stops don't, or your hard stop loss levels don't change, but the trailing levels do, obviously. But that, this is how you can actually add some structure around around your trading, so that you don't put yourself in a situation where you're not taking profits regularly. Right? And you can adjust all of those levels, whether you're trading spot or whether you're using leverage. And if you're using leverage, you can put in any input you want up to 200 times, which I hope you never do. Then you can adjust your stop loss levels, your hard stops, and take profit levels all again, and it will monitor it all on your chart. All the stuff that's, when we tell you to do it, is actually overwhelming. Right? It is. Like, you gotta, oh my God, it's a lot to think about. And you're like, oh my God, all I'm gonna do is think I'm never gonna make a trade. This is gonna help you organize all of that. But you have to put the structure around it in order to efficiently monetize the chart, in order to take profit when you're supposed to be taking it. So we have a lot of risk to the downside. And again, this is the 200 on the weekly for NVIDIA, and it sits at 86 bucks. I'm not saying it's going there, but I'm saying that it's in play. Because here you broke the 20 this week, and you're breaking structure, right? This is a structural level. There's your next level is the 50. Now you hope it's the first touch, and you hope that it holds. It bounces and goes on and makes new highs. However, it finds itself right in the middle of that gap. And you have to take that into account. So what do we know? We know that if it bounces or holds here, we know what our target would be to the upside. If it fails, we understand the conditions that are around that failure. You're failing in the midst of a gap with the draw for price to the downside, right? You've got the VWAP and the upper value range in here, and the 200. There's the 100 just for interest's sake. Have we shown many times before what happens when you break levels and don't get support at the next expected level? I think so. Could NVIDIA do what Bitcoin did? You don't want to believe it, but yeah, it can. Anything's possible. You're going to learn that anything's possible if you're still in denial, because it is. Right? I'm not saying it's going to do that, but just don't be alarmed when it does. And these are the things where all the money is, folks. Right? We know this. We know there's so much money in things like NVIDIA and Google and Microsoft, and the list goes on and on and on. So does that have an impact on what's happening in the markets? Yeah, it absolutely does. That's a lot of money being moved around or pulled out, or God knows what it's doing. It just is. There's Apple's daily chart. Right? Do we care where it's going to go ultimately? No. Because all I know is that at 279.75, I got a sell signal on this daily chart, and if I back it up, maybe we could have gotten, we could have got a slightly better entry on the 4-hour, which is why we use it as a step onto the daily. But all I know is that you're told to sell. Well, they're going to say, don't short Apple, don't short Apple. You know what? You short whatever you want. Short whatever the chart tells you to short. Because listening to the group speak, getting sucked into the tornado, that's the problem. Listen to the chart. The chart said short it. Could have traded it all the way down to an obvious level, the lower value range. A place where price has been before of relevance. And then you're done. Market's got to figure out what it wants to do. Oh, lo and behold, there's another trade. And again, if we would put our stops and targets on here, it would all be laid out for us. And yeah, you can automate your trading based on a plan. But we're just doing what we're told. Hey, price broke the 50. Is that positive? Yes. How did we have any idea that price might want to push past the 20 MA? Did we have any idea? Yeah, we did. Why? Because we were diverged in this case up and to the right. This divergence when it's open is a little clue. There it is at the 50. You're approaching the 50 with it up and to the right. There's a higher probability that it pierces through. We've shown this time and time again. But nobody wants to think about what can happen if, right? Now Apple, listen, it's a great company. It's got lots of cash. Probably if things go south and sideways, it would be one of the least damaged assets to be in. Hypothetically, right? Lots of cash on hand, solid brand, like all the reasons that you would think it would be strong it will be. But it means it just doesn't take as much of a hit as something else, because it has probably higher relative strength, like we talked last week or earlier this week. So in contrast, if you were looking at stock, what are people trading that might look exactly the opposite of this? How about Microsoft? Still a good company, right? You can't say it's a bad company. We may not like what they do to Windows and things like that, but is it a good company, well-run business? Respect, yeah, it's all those things. But we don't live in a utopian world, right? Things often go sideways, even for the best of businesses. This up here should have scared any trader, and probably did, obviously, by the sell-off. But if we take all of that away, let's just pretend as all we're using is just our indicator. It told us to short this thing at 324.96. I'm sorry, 524.96. And here we're sitting at 405. It's not a bad move, regardless of how you would have played it. But as all I know is that we get a signal to go short. We break one level. All this opens up, diverge down and to the right as you're approaching support. It's basically telling you that it's not going to hold by staying open like that. This is just impulse down, sideways back to our levels, and then failing. And you're told you're going to fail because all of this is wide open right in here. So then you hit the 50 again, you fail. That lower value range doesn't really put up any fight at all. You can see it tested the 50 and then rejected. What's it looking for? Obviously, it's looking for the 200 MA. Or if we look, we can condense the chart and look for these benches of past price. You're going to pick this up, obviously. So don't be in denial. The denial is what's going to cost you money. And, these charts, the charts are here not to have some kind of love affair with. That's not the point. They're here because they're a means to an end. This is XRP, and again, we're not beating up on anybody. This isn't the point. The point is, as you're picking yourself up and dusting yourself off, looking for the spare change that's left over after getting kicked in the teeth, you have the ability to look in the mirror and say, what happened? And the answer is, you didn't do what you were told. Did the weekly chart ever tell you that things were just fine? No, it didn't. Matter of fact, it told you that things were not okay. We're here because we're interested in what money is doing, not what people are saying. And I can assure you there was all kinds of people rationalizing this move down. Oh, bigger things are yet to come, one day this is going to be this, that, and the other thing. I don't know, maybe it will be, maybe it won't be. But today it's not. Is the market telling you that narrative is looking truthful? I don't know. Not really. Not to me. But at the end of the day, we have the ability to read price on a chart. We were told because the market told us, not because we were any smarter than anybody else, just simply because the market told us so. I'm going to use this big, massive move. So that's the bottom. This is the weekly chart. That's the low when everything was consolidating. And then here is the highest of the highs. These just throwing fibs on there. Even the fibs told us you were coming back to here. Yeah. 169.9. That's 618. Well, we're not going to 618. We're already back at 786. A hair away. And what do you think it really wants? The 200 MA. So we trade on fibs, fractals, and filters. Those are the things that we believe in. They help us build the structure that we're talking about that allows us to track and trap price so that we can monetize the chart. So this Leonardo Fibonacci guy, this stuff's been around for hundreds of years. Although no one can really attest to exactly how it works, we all understand that it does. And that these levels that price comes back to, whether they're psychological or there's something else going on, who knows? I don't even care. Because all I know is that they're reliable. So if you believe in basic fibs, take this big-ass weekly chart, lock them in, and what do you see? 618, you know, is a reasonable pullback level. 50% would be more preferred, obviously, but 618 is acceptable. So we always knew it was coming back here, especially as our filters were telling us, A, signal tells us to sell, B, our filters are telling us how to manage the trade. We know how to read price. Now we can read trend. And fibs are telling us to look for a certain level, which is in line with, as we showed, the 200 MA, the upper value range here, falling into this gap. All of these things line up to tell you the same damn outcome. Price was falling. And it was going to continue to fall. And what do you think is going to happen if you don't hold these fib levels? Breaking levels. We know where it's going to go. South. You don't think it's possible that price comes all the way back to the point of control? Yeah, it is. If you don't find support at the level you're at currently, the next level down is in play. And the next level down on XRP, I'm sorry, is way down here at 50 cents or in and around that neighborhood. And when you look at your chart and you realize that you're in this gap with low volume, which means there's not a lot there to hold price up. Why? Because of this parabolic move higher that we always warn. Hey, if you didn't catch the big parabolic move to the upside, just wait, because you're going to get it to the downside, because the gap will get addressed. And this is what we're doing. Right? This is exactly what we're doing. Remember this chart? Like this wick hitting the 1000 MA on XRP? Is that an accident? No. It's because the market's fractal. And you either believe this stuff or you don't, right? I get it. You're either going to you're going to believe it or you're not going to believe it. And you're going to flesh out a methodology and a strategy that works based on what you believe. I get all this, right? But I believe the market's fractal, and this is a language. And this is why I tell you that, hey, you might feel like a weirdo putting a buy order down there at a particular level. This is this is when on the odd chance that it gets hit. But ultimately on this candle, and this is kind of important, right? Because this is where the group speak comes in. I'm going to take off the volume profile. I'm sorry I keep doing this. If somebody tried to argue with me on this candle, on this asset, on this day, or not these days, that the push higher to close here was bullish. Now you guys know me a little bit. Who wants to have that argument with me? Probably nobody, because you don't believe it yourselves. But why does someone believe that this is bullish? Right? Because of the narrative, because of the groupthink, because of the group speak, because of being sucked into someone else's tornado and losing the ability to think for yourself. This candle flushed out the entire world, I get it. But is this bullish? No. What's the market telling you? It's telling you it's not bullish. Oh, big move down, impulse right, snap back, can't break the T-line. What happens? Price falls. And here you go. This is the daily, mind you. And how do we filter out all of this other noise? We just go back to the weekly chart. The weekly was telling us all of those green candles that you saw were just these things, right up in here. The weekly candle under this sell signal is the boss. And it was telling you that the stuff you saw in the daily was just a little bit of intraday and intra-week drama. That's all. The trend was down. This is what it wants to do. And again, we show this a million times every week for your benefit if you want it. It's here for all of us. No one's charging you to take this information. You want to go get this information at Blunt House TA on YouTube, it's all there. You can watch it over and over and over again. It'll be repetitive as hell, but at the end of the day, you'll know what you're doing. Another example of breaking everything and coming back to 1,000 days. And like I tell you before, when you get to a target, it doesn't necessarily mean that you have to exit. If there's more momentum down, there's money there, well then take it. That's up to you. But I would much rather see you using a structured system like we talked, where you can take a buy signal and then structure your way through the trade. And be taking your money at regular intervals without even thinking about it. But we knew where this was going. We've always known where it's going. And the hard part for me is people being surprised about it. I don't get it. It doesn't matter what we look at today, it's going to be nuts. We're not going to get much love from anything. Oil is an interesting chart, right? This is a futures contract for oil, the daily. There is a buy signal on the daily chart back on the 8th of January. And if we notice, has the chart, even with, some of these big sell-offs, did we break trend? Not yet. Now, most would probably be shaken out of this trade up here because of the way oil's performed. But isn't it interesting to note that none of the divergence broke? The trend has still been higher. These are the random walks that Bachelor talks about. But the trend, directionally, is consistent. So what are we doing? We're going to filter out all of that random stuff. That's stuff that moves up and down inexplicably, or apparently inexplicably. And we filter it out so that we can actually stay on and in a trend move. And the daily chart of oil is still telling us that we're okay. But because we believe in fractals, right, we want to be validating things on multiple time frames. What's the weekly look like? Well, certainly less chaotic. And the takeaway, if we were to close today, is that you came back and tested the T line and moved higher. To me, even though it's a red candle, that's bullish price action on that time frame. And what do we have here? This big impulse higher that creates all this air. What this candle did this week was basically close all that off and then pushed up. So again, that's part of the reason why I see it as bullish. What else do you notice? Notice this level of the wick? It's structural and it held somewhat. All these little things, that's bullish. I've been very clear on where I thought oil was going, and we've been, pretty accurate. But we also have to acknowledge when it looks like there is a reversal in play. And I think it's fair to say that this could be somewhat of a reversal. And if it isn't a complete and total reversal, it's a hell of a trade. And you can trade this through a leveraged ETF. You don't have to buy futures of barrels or anything like that. There's lots of ways to trade these things. ETFs, leveraged ETF, there's lots of ways. And they all come with their own set of risks, but we understand that. Point is, you knew that this trend was higher. If you took your candles off, you'd be like, yeah, okay. So anything that we look at, let's look at our friend Astor, because everybody likes to. And I get it. Lots of talk, lots of excitement. The chart went south. Takeaway? Group speak. Tornado. Get the hell out of it. Trade the chart. That's all that matters. What money does, not what people say. It's entertainment, interesting. Some of it's useful, some of it's not. Some of it might take 10 years to materialize. I don't know. I got to deal with the here and now. I got to trade this chart. That's what we have to do. That's our job, to monetize the chart. Let's go to the 4 hour because there we go. Can you trade that chart? I think so. Are making these, these longs or shorts doable? Yeah. Is it less stressful than listening to someone tell you what to do, or you ask questions on what someone else thinks is going to happen? I think so. Do what you're told. Do what you're told. Do what you're told. Do what you're told. Not that hard, unless you don't like to do what you're told. And if you don't like to do what you're told because you think you know more than the market does, well, then you're going to get kicked in the ass every time you trade. You have to put all of that stuff aside. Check your ego at the door. Listen to the chart. It's the only thing that matters. If you can take anything away from all of this market drama, when we talk about this isn't about what people say, it's about what money does, you should really understand by now what that means. You really, really should. And I'm trying to find a green chart and I can't find one. This is Solana. I know there's a lot of people in this space that have high hopes and aspirations for Solana. Well, over time, this chart's kind of told you, or the money has told us, what it thinks. That's the weekly. Now, here's the funny thing. When you look at this weekly chart, think about all the people that you've heard that want to long it. on a short time frame. Right? You're like, oh my God, that does not look like such a good idea anymore. No, it's not. It's a stupid idea. The trend is your friend. And you try and fight it, you're going to get killed by it. So this is why I want you to look at these longer term time frames. Because so many of us are trained to only trade long. And like I said earlier in the week, if you're not comfortable trading short, you better learn really fast, because you might be waiting a very long time to have the kind of long trades with consistency that you're used to. These are just charts. It's just the expression of money based on mathematics. That's all it is. You don't have to get it, you don't have to get me married to anything. My God, this thing just melted down another 1.5% as we're talking. Anyways, the chart here was just telling you what to do. There's no opportunity to long in here. And if you're trying to long these candles, I think you're better off shorting these ones. That's just me. The only goal is to monetize the chart, and there was nothing in here to tell you that you were going to be successful in making a long. And here's your 4 hour. Right now, this can go back for a while, but I mean, this was probably your last meaningful run. All of these other longs that you were trying to make, this is what they actually were, right? Just tiny little retracements in a downtrend. So the fractal looks are very helpful. The longer the look, the more noise you're going to take out. And we don't want to trade chop. We just want to trade breakouts and breakdowns. That's it. Right? Let's not make this any more complicated for ourselves than we have to. And based on what everyone is experiencing right now, now is the time to really put that into practice. Try and simplify what you're doing. Again, reduce the number of things that you're tracking and monitoring. Find 5 or 6 tickers, whether they be stocks or crypto or a combination of them or commodities, doesn't matter. But don't overwhelm yourself trying to find new things to trade. Get comfortable and consistent with a handful of tickers that you know really well. So if I was to say, hey Fred, what does Google look like on the 4 hour? You should instinctively be able to tell me. Oh, Blunt has failed at 20 on the 4 hour, whatever. Because in chaotic times, you're going to be glad that you don't have 52 cards in the air. Because you won't be able to keep track. Most of you probably aren't running stops and things like that, so you're frantically trying to not get your butt kicked, running around in circles. You don't have to do that. Right? Reduce the number of things you're trading. If you're trading with leverage, lower it and extend the time frames to protect yourself from that volatility. If we go back, just as an example, this is Google, whatever time frame. This is the daily. There's your buy signal. There's your stop loss. That's your hard stop. You didn't get stopped out. There's take profit 1, take profit 2, and take profit 3. You're done. You're literally done. And you can automate all of this, right, in here. Whoops. You can automate it all yourself. You can adjust the top, you can adjust the stop losses, you can adjust the trailers, the hard stops, where you take profit. It's all up to you. You can stagger it any way you want based on the style of trading you do. And you can automate this quite easily on Transpider. The reason I'm telling you this is because these are the times when you need to be trading with structure. Because if you're not, and you're just, in the school of hoping, it's going to be a problem. So everything's fractal on this, by the way. right? So if you want to trade different time frames, well then obviously you can do that. Right? Here's your most current signal, which is a short signal. Based on how we have these parameters set right now, that would be your stop loss, the hard stop. Take profit 1. Take profit 2, which you haven't hit yet. There's your trailer hanging around. So, worst case scenario, you hit your profit, first profit level, and you get stopped out by your trailer. But you didn't lose any money. This one, obviously, you got all your targets. Or actually, you just missed this one. So you hit 2 levels. Got stopped out on the trailer. Now, if you're automating this, it's very safe. Right? But it's the structure that you need to keep you safe, especially right now. Especially right now. And I'm not trying to tell you this to scare you. I'm trying to tell you this so that you protect yourselves accordingly. Because there are people today that will have lost. I can't even begin to imagine. It makes kind of October 10th in a way look even less of an event, because this is kind of that slow grind, right? Slow grind. After parabolic price movements higher, Monero was the best performing at one time, best performing asset in crypto, as you can see. And of course, our Z-score indicator helps us see these things too, right? So we want to be trading the things that are strong at the right, be at the right asset at the right time with the right signal, with the tremendous amount of confidence. You're buying as you go through that 0 level. Coincides perfectly with our signal, and price rocketed up. But we have the ability to appreciate when it's overextended. That's a standard deviation of over 4 above. I think we're on a 20-day look back on this. That's a lot. So what do you expect to happen? You expect things to peak out and fade a little bit, and that's exactly what they do. And the relative strength fades, and so does price. You finally get your signal on a big dagger, and then the trend, well, pretty clear, right? You can't argue with it. And you know that this is light, you know that this is light trading, and you know this gap is going to be problematic. And here you are, that is the point of control. And this thing is actually melting as I'm adjusting my screen. That's why it's changing. So it's looking for that. If there's no relative strength, did you want to long this? No. This is another validation that you don't want to be long in here, if you needed anything else to tell you. But because A, divergence down and to the right, price trading below the T-line and 5 EMA, and there's no relative strength. It doesn't have a hope. Big gaps, draws for price to the downside. It doesn't have a hope. And again, we can be in denial or not. And everything we look at today is going to have some kind of drama attached to it. This is United Health. What's my number for United Health? $200. And it has been for quite some time. Is this 200 down here? Yes. So that white line is 200. When you fail, this is a weekly chart. This thing was beaten up. Basically kisses, that's the lower value range. Runs and hits the, like wicks the VWAP and then pulls back. That's not bullish. It's not. It's a retracement in a downtrend. That's what it is. That's all it is. And even though with this big impulse down here, guys, if you can see this in the center of your screen, look what it did to the relative strength. It pulled it down below -2. And it starts to come back in slowly. But this isn't measuring price, right? It's measuring the relative strength. And when you're this line cuts through the zero level, that's where the money comes back in again. And that typically also applies to the downside. Right? This thing just faded up here, started to roll over, and when you see it break the zero level on the z-score indicator, that's not a good sign. And of course, you've got everything else to validate what your level is here, knowing full well that there's much more downside to come. Okay. This is the monthly chart. It just looked like the Solana weekly, didn't it? Big volume gap, failed breakout, roll over, take out the previous wave's lows, and that's how we get down here. It could be wrong. You know, it's not pin the tail on the donkey, but we're just a chart. We're just looking at a chart. Is there any relative strength in here on the monthly chart? How about no? Maybe has something to do with why price isn't going up, because nobody wants it. Everything is fractal, so we're looking at per time frame. And if I compare United Healthcare to its comparable set, so we have SPY as our benchmark, XLE, XLK, XLF, XLU. And in the fifth spot, avoid, is what? United Health. So on this time frame, and this is all, you know, if you're looking at the monthly chart, your trading is structured differently. But what it's telling you is that you probably want to spend money somewhere else. What does it tell us on the weekly? Exactly the same thing. What's the highest performing thing compared to the SPY? XLE, which is energy. So what do you want to do? Do you want to trade United Healthcare, or maybe do you want to trade something in the energy sector, or XLE itself? Do you want a car that goes, or do you want a car that goes the fastest of all the cars? That's your choice, right? And again, credit to David Nikoski, because that's, you know, an understanding that I have much. I can appreciate much more now because of knowing him. And it makes all the difference in the world. Because, hey, we can have signals, right? We can get our signals, that's great. But we want to get our signals on the best performing asset. And this isn't it. It would be the best performing asset if we were looking to go short, but it's certainly not the best performing asset going long. So why would we spend any time here? We can be bang on with our entries and exits and stuff like that, but this is not the thing that's going to return the most. You want to be trading the thing that's performing the best, so that when you monetize the chart, you maximize your profits because of its performance above and beyond comparables. That's an edge. Being able to read price is one thing, but being able to have these other edges is a whole other story. Let's look at BW, because this is a chart that a lot of people have never seen or heard of. It's called Babcock-Wilcox, and it's an old school stock that I think the company maybe even filed for bankruptcy at one point. I could be wrong, but here's a chart that was dead, right? Literally dead. Let's make it look more dead. Let's go to the weekly. All right, so you can see what I mean. Well, it found a heartbeat. But where does it have a little bit of a heart attack is up in here. Why? Why did it all of a sudden stall at this level? Well, because this is structural, right? Like these are highs back in here based on the big melt. Is it normal to maybe think that we'd get a little bit of resistance up here? Sure. Is this chart still bullish? Yeah. You know, today's candle is not helping, and this weekly candle's kind of ugly, but you're still holding the 5 EMA, and there's the T line. we've shown before, you can come back and wick the T line and then bounce. But this is still a bullish chart. No matter how much it's been beaten up over the last couple days, it's still bullish. Right? There's the daily printing our first sell signal. The weekly is still bullish. I don't like it right now, I'll have to tell you, but let's look at the 20. Where's the 20? Boom. That's what we're breaking today. What do you think we're looking for? Well, we see this gap here in this big-ish shelf. There's the 50. Does that kind of put the 50 in play? It sure does, because it's sitting at the base of the gap. This is the first touch of the 20 MA since it broke out on the daily chart, and it failed. Is your takeaway bullish or bearish? Bearish. We would typically like to see price hold there, or get some limited support at the very least, and it didn't get any of that. So that's bearish. And then as a result, you have to start looking, what's down and to the right. And if you notice, your T-line and 5 EMA are starting to diverge apart. And when that happens, as you approach those major moving averages or those other levels of support, there's a higher probability that it doesn't hold. So if that's the case, you're going back to the 50, which puts you in line with some past price. And we just keep doing this just to find these levels. Now, some people will say, well, 100 MA, just who cares? Well, look how Bitcoin treated it on the weekly, right? 8 weeks of it playing around there until it decided that it was going to fail. You don't have to leave these things lit all the time, but if they're there, use them to your advantage, even if it just means you flick them on and off, just so that you know what's there. Because ultimately, I think you find it helpful when you can see. Right? These are the things, like, how did we know, or why were we so confident that the daily Bitcoin chart was going to the 1000 MA, just as an example? Because we understand this language and how price moves. These simple rules that we talk about support and resistance and how price reacts to it when it hits it and what it means. These are all the things that are easy to learn and apply. Structuring them can be difficult, I understand that. But all of the things that we show here happen time and time and time again, and we've been doing this this stream and ones like it for 6 years, right back to the original when I was introduced to the Fed guys and they helped me set up my first digital wallet because I was a moron and didn't know how to do it. Right, like going back then as Bitcoin's going to 60 some odd, 65, saying don't get too excited because you're going to be at 30. Been doing this for a while now. And we're not doing anything that is overly complicated or revolutionary. It's just acknowledging that the market speaks to us and tells us with reasonable reliability what it's going to do. And we're watching that unfold in real time. And don't ever apologize for being correct as you're providing a rationale, not a prediction, but a rationale on where you think price is going. Just because other people don't want to hear it doesn't make you uncredible or wrong or anything like that. If you have a rationale, provide it. But don't just say price is going here because I believe that. No one gives a shit what you believe, especially the market. The only thing that matters is price. What money does, not what people say. So again, no one cares what you think. This price is all that matters. We can read it and we can read trend, and we can also determine which of the assets we want to trade that are the strongest so that we have the greatest ability to monetize the chart. You are being told here, as price was rising, that the relative strength was fading, that the partiers were leaving. You're being told. Now, that divergence is important, right? Because it's a divergence in price and relative strength. So think of it as a divergence in price and participation, if that makes it any easier. That lack of participation is the fading relative strength. And the relative strength and that lack of participation doesn't show up in price. It's not a registration of price on your chart. It's just basically showing people leaving. And that's what happened here. And they're still leaving. So I know this in some ways probably sounds like a bit of a horror show. And that wasn't the intention. But I think that, you get frustrated on what you don't understand people need to see. The reasons why these things are happening are obviously relevant to a degree, but at the end of the day, what is going on with price on a chart that you have to prepare yourself today for? This is Walmart's weekly chart. Now, Walmart, still, a bullish stock. Right? It really is. And it's, people are going to be looking for, like, in times of trouble, what do you look for? Safety. Which companies, at first glance might provide that safety? A company like Walmart, a company like Apple, and a handful of others. But, it's probably not going to be in tech and things like that. You got Google going the other way. That's a weekly chart. What did we know about price and relative strength? Could you be confident taking this signal as you see relative strength start to come back in? Yes. Right? Yeah. So we got a signal way back here at 164 on the weekly chart of Google. You can see it coming back in. Our script opened up here. We got you would have had a really good entry on this. And then all of this green supporting that price move higher, that's relative strength. That's the market supporting you. As opposed to being dragged around by the index, like a little puppy, this boy drives the bus. And there's a difference. Because that little thing following the market around like a puppy may have only had a handful of % gain. It went up, but it didn't go up like this. Why? Because relative strength makes this the best of the best, right? The cream of the crop. You want to be owning and running with the outperformers because they can run faster and farther. And that's basically what you're doing. But we have the ability now to read both relative strength and price and trend, which makes all of this pretty lethal. You throw in our volume profiles and some targets, wow, structure your trade on the way up. Now, we have the ability to structure through our script here to take regular, we have like 3 take profit levels. But if you see this divergence still open and going to the right, with reasonable confidence and certainty that the trend, there's 3 red candles. Oh no, do we sell? No, they held the T-line, price moved on. Right? So you have the ability to determine where you take your profits based on the trend move too. Right? You might want to adjust them. You'll see this as being opportunity. Hey, this is the runner I've been waiting for. I'm not going to check myself out early. That's okay, but at least you're on the right side at the right time of the best performing option that was available to you. And that's key. So I wanted to look at Lily. So, the market giveth and the market taketh away. So yesterday, I think there may have been earnings. Stock popped. Today, stock drops. This was a big expulsion up, right? Like, you can see the strength to move it higher, but it's kind of getting a hard no with what's going on in the market. And what's the risk? The risk to the downside is that on the daily, you're breaking the 50 and the 20 all in one swing. And the 20 and some longer term averages are sitting here in and around what is that? 856. Below the lower value range and into a gap. And these are just the little things that we stack up time and time and time again to try and give us an idea and understanding of where price may go. Here's Tesla. Relative strength came back in. Price went higher. Relative strength left. Notice that the signal comes basically at the same time that the z-score breaks the zero level, and that's designed that way. This is a validation to me that this is a safe entry. They work incredibly well together. And all of this move down, look at this, there's no relative strength here. So did you have extra confidence that perhaps this was going to continue? You should have, yeah. And the risk to the downside, there's that gap again, break the 200, fall into it, and here you go again. And this will be true again on everything we look at today. Whoops. Micron Technology. Beautiful, like it's been a great chart. Look at this chart. It's a weekly chart. This is why I love the weeklies. I wish people would spend more time on them. But super, super flat, consolidated. All of a sudden you get this big impulse down in your relative strength and print a symbol or a signal right at 91 bucks. Yeah, 91 bucks. That was only in November of 25, so just over a year ago. 378 today. Has this divergence stayed up and to the right? Yes. Has the relative strength stuck, giving you that extra confidence that price was going to move higher and that this was the fastest car on the track? Yes. It's a great trade. These are the things you want to buy. Buying a signal is one thing, but buying that signal with the assurance that the relative strength is behind you, that's the best of both worlds. So ultimately, don't be afraid to acknowledge what you see on the chart. It is sending you a message. Whether you want to hear it or not, it's sending you a message. Don't ignore the chart. And in this case, we've had plenty of warnings about where price potentially could go and how quickly that may happen. And I think we're seeing it in real time right now, right before our eyes. This is the weekly chart for SPY. And, let's just go to the daily. You can see we printed a sell signal. All of this consolidation up here, right? Flat, flat, flat. So if you just can't break out, at some point you're going to break down. I don't think this is a false alarm. I think we do kind of break into this level. Broken the 20, broken the 50. You've heard the expression, how did you lose your money? Slowly at first, then really, really, really fast. Yeah, maybe that's going on up here. And then you come back to the 200 on the daily, which is on SPY 643, 644, something like that. Well, 631 is the 50 on the weekly, and I'd be more inclined to say that level, or even this, really, right? Current price will look for past price, and wherever the most past price is where highest probability is for current price to go. Fail one level, find the next level. If you bounce there at the first touch, well, then you know you're going to try and take out those previous highs. If you don't, you know what happens next. So hang on, because after this little bit of a melt, you're going to get, in all likelihood, a little bit of light at the end of the tunnel, or so it would appear. You're going to see those green candles that appear in a downtrend. And some of them might feel real good, right? After this big impulse down, maybe I should use Bitcoin. After this big impulse down, you should expect to get some sort of a snapback. Now, if that snapback, and we'll just use this daily Bitcoin chart as an example, but if that snapback doesn't break the T-line, doesn't break the 5 EMA, then I consider that to be bearish. Because in order to change the trend, you have to push through those levels with enough momentum to reverse everything. And if we were to try and reverse this trend, I don't think if price spiked to the 20 or 50, it would do that. I don't think it would have enough momentum to drag all this stuff up and over and begin that trend reversal. This has been too big a move down. I actually think you get this big impulse. You know, you might get a few green candles that get you excited. Maybe they test the T-line, and then I think they just prove to be retracement candles. I think the big concern is, as you look at your weekly chart, and I think for interest's sake, I'm going to switch to this chart because you've seen this before, because we put these levels on here. Remember, this is our Bitcoin chart. Weekly, it's our trading view chart. Signals are consistent as far as when they fired. We drew this level here because we were capturing, just trying to kind of condense an area of this past price. And we did this because we wanted to be able to demonstrate that current price does come back to past. Not just once, twice, 3 times, but it'll keep doing it until it gets the support it needs. This is a logical area for price to want to come to. And do you remember us talking about the 200 MA? That over as time and price come together, the 200 will work its way into this zone and get tagged. It's in our streams. That's looking close to what might happen. Now, if we don't tag it, am I disappointed? No, it is what it is. It's not, I don't really care. Right? From, you know, if you're short here, do you really care if it misses it by a nickel? Not really. Okay, so we're here to get you close. It's not pin the tail on the donkey. Bottom line is that current price looks for past, and this was a logical area, as you can see, that it would come back to, and here we are. And does this gap below this level scare me? A little bit. I have to admit. A little bit. I remember not wanting to talk about this area as price was falling with some velocity, and here we are. So if we fail the 200, this is a first touch, so you would expect it to get a little bit of love, even if it got this kind of love for a while. But you know, if it doesn't hold, it puts all of this in play, and that's just crazy, right? And then you're just looking for, let's have some fun with this. Then we're just looking for, so basically what I'm doing is taking a flat level of the T line, and it just happened to align with the bottom of these candles, the top and bottom of in here, a little bit of wick, and same in here. So I'm just throwing it on there just for interest's sake. to see if we stay in. But these are the levels. Like here's another one. Like this starts to feel a little sketch, right? There's a lot of different ways we could do this. But anyways, that's, I don't want to leave these on here, they clutter it up, but that's how we're doing it. We're just looking for past price. But I think you have to be very leery about this. This looks like it's going to happen, so. And I don't like delivering bad news all the time. But we just have to be really honest about what we see on our charts. And right now, what we see is not good. And here's the VIX, right? The volatility index. It's one of the few things that's up today. And we have SPX on the weekly. I'm sorry, I thought it was on the daily. There you go. Broke one level, found the next. Broke that level, found the next. Let's see if we break that level. NASDAQ did. What do you think NASDAQ's looking for? The next level down. Here's the 100. That was the structural level we had to hold, and we didn't. So what are we doing now? Well, there's the lower value range. There's the 200. You don't want to break this. That's a whole other thing. And look at this. This is all light volume. So that translation, there's nothing to hold price up. There's not a lot of help here. So this is why it starts to feel sketchy or slippery or however you want to characterize it. But ultimately, you know where price is going. We've always known. As soon as you break one, look to find the next. And when that phenomenon reverses throughout its process, then it reverses. But as long as it continues to happen, the next level becomes in play. And that's how this played out completely. And because we live in a fractal world, start looking to the longer term chart to see what might be coming up next. And here we are. So I know I'm sorry if I ran it today, but I hate it when days like today catch people off guard, because they shouldn't. Right? And the purpose of this is to keep you safe and then to help you make a little bit of money at the same time. But ultimately, we don't want you to lose any. So if we listen to the chart, if we do what we're told, we listen to the chart, get out of our own heads, forget about the group speak, block out the noise, structure your trades professionally, based on the type of trading you're doing, adjust your take profit levels. But if you do that like it's a religion, without question, committed to your stops and committed to your take profit levels, that structure will pay you, and pay you well. So maybe the ultimate advantage is just being a pro, treating it seriously.
Yes, tell them, Blunter.
Yeah, here we go. Anyways, guys, it's been a long hour and a half, and I hope you got something out of today. But everything you've needed has been in front of us the whole time. And I hate to come back and say, like, we told you so. But there should be no surprises on any of these things that we're looking at. Right? There shouldn't be. If you're interested in trying to figure out how we do this, you're all welcome to join our Telegram group if you're not in it already. We will continue to do these sessions, and we will continue to try and provide tools to help you mitigate risk, provide structure, and monetize the chart. So have a great week, what's left of this week, and enjoy your weekends. Come back revitalized next week, and we're going to do this all over again, and we'll see where we're at.